Welcome to The Exchange. I'm your host, Rob Cox. Today we're discussing big banks, who fails, who flourishes. I have two guests, Kirsten Grind, a reporter at the Wall Street Journal and author of the book The Lost Bank, which is about Washington Mutual's demise. Also with me is Anthony Curry, one of Reuters' own. Welcome. So what can we learn about Washington Mutual in the days now where we have Jamie Dimon hauled up in front of Congress to talk about bank failures? Tell us what you can learn about what happened.
One of the things that I try and do is I take you through the last 20 years of the banking system, and you see how it's moved from this, these small banks that were very customer friendly into just these gigantic institutions. WAMU used to be known as the friend of the family before it grew into this giant behemoth and then collapsed spectacularly.
What actually precipitated the collapse? I mean, is it the actual desire for growth where you'd have a community banker like, I don't know, Kerry Killinger, whoever ran this thing, and they just, the desire to grow, get bigger and bigger, and they just completely forget who their customers are?
That's one aspect of it. It also doesn't help when you decide that you're going to make a huge deep dive into risky mortgage lending, which is what WAMU did. So they were growing hugely, and then they also decided that they wanted to be the country's biggest mortgage lender. So that was what really led to their downfall.
I remember when I first read the book, the beginnings of it seemed quite parochial back in the early 80s, and talking about the CEO who rescues them, or comes in from the board to rescue them. Right. And he's very happy to just smoothly glide along. But then you see Killinger come in, and he was handpicked, right? Right. And he's handpicked to take over. And yet throughout the 90s, he spends his entire time putting his stamp on by just buying and buying and buying and buying. So I know we've seen that in other banks in the 90s. This is a great example. He increased it tenfold by assets or something. Yeah, and just thought number one is the place to be, which
he was just all about the number one position. And they had this terrible ad. It was the power of yes. I mean, they were taking out billboards all over Times Square. It was implied, obviously.
Never say no to any demand for credit.
Exactly.
So it would seem.
Yes, and so, I mean, when you go that route.
Okay, but so now we have this in the past couple weeks. We've had Jamie Dimon, whose bank, J.P. Morgan, ultimately acquired most of the assets of WAMU, right? He's been up there, ironically. This is the guy who saved America by buying WAMU and Bear Stearns, and now he's, of course, being vilified as a banker who, oh my God, lost money.
Right.
I mean, part of the argument he's made is that we had all these excess deposits from Washington Mutual. Is it possible this thing's come back just to haunt him?
I mean, it's very eerie watching this now, right, with him up on the Hill and all of this, because it's sort of like, has anything changed in 4 years since the financial crisis? Because he's kind of up there talking about the bank's risk-taking, and everyone's trying to figure out what exactly they did. I mean, that's exactly what we were sort of dealing with.
And spending some time saying, don't worry, a lot of what we did with this CIO office was in AA and AAA securities,
Absolutely.
which you're citing the ratings agencies now. I mean, it's
exactly. And I'll just say as a side note, it is always terrifying when you can't explain a trade to someone. I mean, I'm really looking forward to having them actually give a detailed explanation for what they did.
Right. Well, there's a difference when you say you can't do it because you're trying to unwind it. You want to be secret. There's another one you actually can't explain.
Exactly.
I'm going to give Jamie Dimon the benefit of the doubt that he probably understands the trade.
Yes.
But he probably can't. At some point we will have
Let's hope.
I'm sure we'll have like a big analysis of charts and all that kind of stuff.
Yeah.
But just going back to J.P. Morgan, one of the things that Dimon had said was banks can fail, banks will fail, and this is how it should be. We should be put out of business. The name should be buried, which is, of course, sort of what happened with WAMU.
It is sort of what happened.
And I mean, in one way, WAMU was emblematic of what we want to happen in the future, which is where the government doesn't have to bail it out so much as the creditors and the existing sort of capital structure.
Exactly, but that's very controversial, right? So in the eyes of the government, WAMU's seizure and sale to J.P. Morgan was flawless. It didn't tax the deposit insurance fund, no sort of customer lost their money, but yet you had all of these mom and pop shareholders, you had the bondholders, TPG, which is this gigantic private equity firm, loses $8 billion. I mean, so that was very controversial. And just to be honest, the way the sale was handled behind the scenes with J.P. Morgan and Jamie Dimon was also very controversial.
Well, this is, and one of the arguments that Jamie would make, or Sheila Bair, who was at the FDIC, or any of the people who were the creators or engineers of Dodd-Frank, would be that now we've worked it out. So it's not just going to be backroom dealings.
Yes.
We're going to have a resolution authority, which is the ability to wind these things down with some calm, right?
And they all are making their living wills.
Living wills. So,
The thing I suppose is WAMU may well be one of the last banks which could be dealt with in the way that it was, i.e. taken over by the FDIC and then immediately sold. One of the last big banks. Because don't forget, all of the regulators now saying we don't want the big banks to get any bigger. And just go back to, was it earlier this year when the Federal Reserve finally approved Capital One's purchase of ING Direct, a $90 billion of assets company, which is far smaller than any of the banks we're now talking about on the big side. And it took them 9 months to prove that, and even then they weren't particularly happy. So they do need to have some other way of doing this than just taking it over quickly and throwing it over to someone else for a song.
Maybe it's not just that they're too big to fail, it's just that people are coming around to the idea they're just too big.
Another thing that's the problem, and that of course we saw during the financial crisis, is this issue of winners and losers. And it was very unclear how the government was sort of choosing these winners and losers, right? I mean, still to this day, I think a lot of people are confused about why AIG got a bailout and Lehman collapsed, right? And so WAMU was obviously a loser in this situation, but I don't think the government did a very good job explaining actually why.
I mean, I suppose, and you can respond to this, but the argument would be that it was not as interconnected in the financial system. In
Absolutely.
The sense it was essentially a very, very large community bank.
Yes.
And so you could wind it down or allow it to fail, as it were, without it causing massive disruption to the system, which was really the argument.
It wasn't systemically risky. But after the fact, I mean, you had all these Treasury and Fed officials saying, we shouldn't have done that. It wasn't a good idea to let WAMU fail. It caused a run on Wachovia. And then, you know, they had to step in and
So in some respects, it was systemically risky. And in fact, I'd even argue that maybe they even thought it was beforehand, because otherwise, why would you have taken it over on a Thursday night, which is, I think, only ever normally done for Jewish banks in America.
That's right, because of this
and then you immediately sell it, you flip it within hours to JP Morgan without getting the WAMU guys involved. Now, you know more about this than I do, but it does sound a bit fishy there. But you know, in the middle of that crisis, I mean, we've all seen it. M&A was the way out of that crisis.
There were, if you talk to people who were involved in this, you know, whether it's people with the Fed or the Treasury, they'll say to you, it wasn't perfect, but we had a very poor set of options in front of us.
Absolutely.
What were the options for WAMU, I suppose?
It was a panic situation. I mean, look, WAMU had gotten this new CEO. He was there like 3 weeks. He's desperately trying to save the bank, trying to sell it on the open market, and they're not having any of this. They actually put together this plan to save themselves and presented it to the Fed and the FDIC, and they just were completely ignored and then shut down.
And how is TPG? What was their? Are they still ruining this? Are they still angry? Are they still suing?
Absolutely. I mean, they never sued, but I mean, who's not angry about like a $7.2 billion loss?
It's one of the few examples where shareholders were pushing all the way through banks. I think even until late last year, I was getting emails from shareholders saying, what about this, what about that?
Exactly.
I mean, a bankrupt firm has shareholders lobbying. I mean, that's really quite unusual.
The shareholders were I'm so glad you brought that up, because they were just crazy about this. I mean, I would get hundreds of shareholder emails a month for months after WAMU failed. I mean, they were very angry.
Well, look, I don't have a whole lot of sympathy for shareholders.
That's the problem.
I mean, you know, this is why equity is riskier than debt. The great lesson from WAMU is that you can move down the cycle. You can go down through the capital structure. And therefore, people who buy bonds of banks should recognize that that is always possible. They are not always going to be made whole. If that were to happen, I actually think the too big to fail problem would solve itself, in the sense that banks would be, if you really thought the Citigroup or JP was going to fail, you wouldn't give them you wouldn't fund them so cheaply at the moment. And that's the problem, is you just keep funding. And actually they get these big deposits built up, like the CIO, and what are you going to do with them?
Right.
Credit default swaps.
Right, exactly.
Hey, well, thank you very much.
Thank you.
Thank you, Antony.
Thank you.
I'm Rob Cox. Join us again on the next episode of The Exchange.